I'm Epstein, and here we are with your morning flash update for Wednesday, the 3rd of January, 2024, 8:25 a.m. Central Time. And it's a day full of action in terms of corrections, both upside and downside happening in the marketplace, mostly to the downside. It's a day of a lot of economic data. Let's go to the economic data, then we'll come back to pricing. We get the mortgage market headline index, and as you can see, the index up 1.4, the purchase up 1.4, the refi, about flat, down 0.1%. We just had Red Book sales. They came in 3.94% increase in the first 5 weeks of December versus December 2022, and they were up 5.6% in the week ending December 30th versus the year ago. So that bodes well for the holiday sales. U.S. jobs openings, called the JOLTS report. That comes out this morning at 9 o'clock. My mind's already on the FOMC minutes. That comes out at 9 o'clock this morning. We want to see how does the number compare to the last report that was 8.733 million jobs offered. ISM data, that's going to come out this morning at 9 o'clock as well, and they're looking for the index for December up to 47.3 compared to the prior month's figure of 46.7. This is where my mind went, to the FOMC minutes. Traders are going to scour that, and they're going to be looking to see who's arguing for, who's arguing against. Do they get a timing of when the Fed thinks they might be able to move? Things of that nature. Remember, the market had gotten ahead of itself. Any way you want to cut it, 9 weeks of rallies straight in the stock indices is ahead of itself. In addition, they had priced in 6 cuts for 2024. That seems excessive if labor stays strong. If labor were to weaken a lot, and we get a whole week of labor reports, your JOLTS today, you get ADP, Challenger Gray, and the U.S. jobs report on Friday. If those numbers were to start caving in, that could be a different game. That's a big if. We haven't seen that so far. API numbers, Petroleum Institute, come out at 3:30 p.m. This afternoon, so you'll be watching that as well. So when we take a look at the price data, down. So what? Last night I explained that there is no such thing as the January effect. You will hear some commentators talk about it out of the way. January goes, so goes the market. Total nonsense. If you go back and you do the statistical research since 2009, when the market bottomed in the recent rallies, remember, that's still 15 years almost, 14 years ago. Where are we? Split, 50-50. Some years up, some down. It didn't mean anything. Then if you go back even further, you can go back way further. I wrote about it last night, and you don't find anything there. So no. Generally, though, if you take January and February together, and if they're both down, that could be a negative. If February's up, January's down, that could be a bit of a positive. So you got to see how these things want to play out. You're getting a bounce of $3 almost off the lows in the Brent. You come off $2 off the lows in the crude, and now you're back into what I'll call the sell zones of the market. It'll be interesting to see what they do there, if they can hold this rally or not. It's going to be a chop affair for the first couple of days here. Why? Well, if you look at stock indices, they're coming down. A lot of traders think that you could get the S&P all the way back now into the neighborhood of the 4,600 level, where the market plateaued from and then accelerated from as it had that 2-month rally. In the metal markets, you're watching just what the dollar does. If the dollar's up and if interest rates do what they're doing, climbing back up in front of all this jobs report, well, that gives you what? That gives you a kicker to put pressure on most of the currencies to the downside, and the same thing in the metal markets. Will they get overdone? Are the markets just looking at the unwinding of window dressing, traders coming back in, traders saying, I was in this, maybe it's time I cash in, take another look? Very realistic. Are we seeing rotation in some of the tech stocks going on where the Magnificent Seven people are rolling out of them, or are they going to roll back into them on this break? That's another thing that you have to consider. I will be discussing this and a lot more as we get going, because I have my New Year 2024 sale. It ends this Friday, so you don't have much time. You got today, tomorrow, and Friday, and bingo, it's gone on you. 40% off any of my yearly research. So be it my morning spider ETF, be it the combo of that and the futures, which is one that I do think if you're going to just do videos, that's it. Do you take where you get my twice daily written reports, special updates as I put them out, along with the videos? That's the full research. 40 off any of those programs. That's for the new subscribers. If you have a 1-year subscription, I will not honor you move from that 1 year to another one and you get 40 off. Not going to happen. But if you're a current subscriber and you go month to month and you want to upgrade to a 1 year, that I will honor. It's pretty simple. You go to iraepstein.com. You can move your cursor up here. When you go to iraepstein.com, by the way, if you do that, just go under the word research. You can flip back and forth between monthly, daily. Remember, this is only good for the 1 years. So if you're buying a 1 month program, you're not getting 40 off on it. 1 year, 40 off. I think you'll find it, I hope you'll find it well worth your time, effort, and that I deliver some interesting ideas for you as the year goes on. Don't get caught up how the first week of the year goes. It doesn't mean an awful lot most of the time. I'm Ira. You have yourself a great trading day, and I'll catch up with you at the end of the day today. Take care now.